Most traders lose money in the markets because they overcomplicate their strategy, and in this video I want to show you a really simple scalping guide that you can use on virtually any asset because it's got the same principles. And hopefully at the end of the video you'll be able to understand more or less how I understand the markets and sort of share my vision with you, so it can help you out in your trading journey. And before we start off, don't forget that back down in the description you've got a nice discount coupon so you can get Forex Tester online for a cheaper price. And let's head straight in this case we are going to be scalping on gold, okay, in the 5-minute time frame. We don't need anything else. We're only going to look at the market on the London Open and see what happens, and based what happens we are going to react as traders. And this is the first principle, that we don't want to overcomplicate our scalping, because at the end of the day if we're swing trading we can take in consideration more things like news or anything relevant to the asset we're actually trading. But when we're scalping in 5-minute, in 1-minute time frame, we don't want to have too many things, because being realistic, when we are looking at the 1-minute or the 5-minute candles, they are fast candles, and at the end of the day we can't take too many things in consideration, otherwise we are going to make things worse, because obviously we need to look at more things and we can lose trades, and obviously we can have human errors. So the first thing is, don't overcomplicate your scalping. So as we said, we're going to go here to the London Open 5-minute time frame. We're not going to add any indicators, we don't need anything. We could add psychological levels if we wanted. At the end of the day they're great support and resistance, but in this case we are not going to do that. And now we're just going to look at the chart and look at the previous levels of basically the Asian session. We're not even going to look back to the previous day because it's not needed. We're only going to look at the levels that we have got now, because at the end of the day the most recent levels are going to be the most important, because it's where most money is stored. So as we see, the price is in a downtrend, but here in this downtrend we can see this level here, we can see this level here, this level down here is just starting to get created, and these levels just here above. So it's simple as marking out these levels just like that, just to have a clear vision of the levels. And as you can see, by doing this we'll be able to see where our chances are to actually win, because if the price approaches this level here and breaks through, it could retest on this level here and could come down. So obviously trading a breakout wouldn't be very intelligent, but if it breaks down below and retests and goes back down, here we have some more space because price hasn't been down here this day. So here we could have a chance, as well as it breaks through this level, we could be looking at this zone here as a next stopping level. So just now what we can see right at the minute, we have this big zone here and this big zone here where we have some range, some clean movement where we actually could trade. So now basically what we need is some confirmations. We could have different type of confirmations. This depends on which ones you prefer. I like to see market structure shifts and things like that. So let's go forward and let's see what happens here. Just now, if the price would dip down again and break the market structure at this level here, I could consider buying, okay? And as well, if it comes here and does exactly the same, I could consider selling. And if it breaks through and retests and goes above, I can consider another buy. So let's see what happens here. In this case, it's coming up, and let's see if it touches the level. Perfect, it touched the level. Now the only thing we need to wait to see if it does any type of retest or it goes above. Now it's coming down again. This level is virtually irrelevant just at the moment because it's actually reacting to this one. So we could actually delete this one, but obviously we're not going to do it yet. And another thing that we need to look at now is right at the moment, this level here has pushed price up and we have created another level here. Okay, it's not only about dropping the levels and then just forgetting about it. It's more about looking at what levels are created constantly. So right at the moment, this level we could take it away, but just leave it there just for the moment. And now it's starting to come back down. If we see any type of market structure shift, we could enter a sell, looking for this range here and placing the stop loss here above. Right at the moment, if the price comes below here, we could aim for this level here. So let's see what happens. Price breaks up instantly, that is completely fine. So now this level we could completely take it away, and we would only be sitting with this level here. Then we have another level down here, okay? And right at the moment the only clean range that we have is this one here above, because obviously here there's a lot of places where price could stop, and this would obviously reduce our odds to actually get a nice trade here. So now basically we'll just wait for the price to come up here. Perfect, it's breaking through, it's coming back down, break through again. If we see the price dropping back down here, then we could enter a sell position to this level down here. and if it breaks above, then we could start looking for some buys. So let's see what happens first. Okay, it's broken below. So now basically we could either enter the trade on the closed candle, or we could add a sell stop. In this case, how it's closed, I'm just going to add a straight sell here, placing my stop loss above this high above, and my take profit, I'm going to bring it down to here. So in this case, we've got a nice risk reward here, so let's place 1% risk and place the order. Let's see how it performs. And it looks like it's coming up again. Okay, it's coming back down, and there we go, hit take profit. Perfect. It's as simple as that. Most of the times we don't need to overcomplicate, we just need to mark out our levels. Now what we need to look at is that here we have a really big drop. What does this mean? A lot of liquidity that's actually been taken. So now we'd have to reconsider our levels, as this one can be taken away because obviously it has done nothing. This one here obviously has been completely breaking through, so we can leave it to see if it actually retests and drops back down. But at the end of the day, I don't see it really relevant anymore. But what we can change is this big level here, because obviously this has been shifted to this zone here. And as well, we've had another zone added here, okay? Because at the end of the day, this zone can act as a resistance. So basically now what we're gonna be looking for is probably either a break through these levels here to go to look for some lowers, or we can wait for the price to actually do some market structure shift and go above again. So let's see what it does. It breaks through, perfect. And let's see if it actually breaks through the low here. It looks like it might not do that. And it actually has broken the structure. Well, not actually a complete market structure shift, we'll have to wait a bit longer. Okay. Now, like I said, we could have added a sell stop here below, but we must take in consideration that if we do that, our stop loss would be placed right above here, because obviously until this breakout doesn't actually happen, we wouldn't really know where to place our stop loss, because we don't expect this level to be actually relevant yet, because it hasn't actually broken out. So here in this case, I am going to wait, and what I am going to do is refresh these levels. Okay, so basically I've got a nice level here. This level here I'm going to completely take away, because at the end of the day it's not relevant anymore for me. What we do have is this level here that we could see some reaction. So basically we've got two levels here. We've got a nice clean range here that if we get a breakout and a retest, it could go up. And as well, obviously we've got our recent low that is down here. Okay, it could go below it, and we just have to update our low. In this case, it's retracing back up, so that's fine. And if it comes above and breaks this level here, then we couldn't enter a trade, because obviously we still have this rectangle here, this level here that could push price down. So obviously we're not interested in that yet. So let's see what happens. Okay, it's broken through, it's retesting down, and now we could see a push above here, and there we go. Now this has happened, we actually could take a trade on this retest here, because what I would like to do now is actually add a buy stop here above, so that way I've got the confirmation that the price has gone above again and not enter directly on the market. So let's add this around here, and the stop loss, I will be probably placing it more or less just this below this candle, because this candle has quite a volume. And obviously if we look here, the price could easily dip under this level here and then go up. So basically I'm going to leave it just up there, and my take profit is going to be aiming to this level here, because it would be the next level where we could actually find some resistance. So let's see how this trade performs. Okay, it's opened the trade, and let's see if it actually hits take profit. Okay, personally I would be closing the trade more or less here, because the candles are starting to get smaller, and if we look at the time, it's starting to get more near the low volume. Okay, because London has come to a close, so I'd actually close this trade here, because obviously it's not guaranteed that it's going to touch this level. It has came quite up, we are in profit, and we could actually call it a day. So let's see if this trade would actually performed better, or it would have gone to the stop loss. Okay, we would have come to the rollover. This is not always good, and it would have come near again, and it would have hit the take profit in the next morning. Okay, more or less coming up to the London Open. So we could have left the trade open, but obviously I prefer to go to bed without any trades open, so this is just a personal preference, so I'll leave it more or less here. So now basically we just go next again to our London open, and now we would just do exactly the same we did the previous day. And this is just look for our levels and see where we can actually catch some trades. So basically I would mark again my high level that is here above. Okay, obviously here I've got another level here, so we could actually expand this just to there. And then I have my low that is down here, where price is actually reacting. And then obviously I've got my Asian low that is down here that it might not even reach here. And just for now, these are the levels that I actually play with. And this is fine because at the end of the day, most of the time, 70%, 80% of the time, the price is going to be ranging. So if we can take these trades in these ranges, this range is quite big, so we could actually get some profits out of it. Here, the only thing we would need is an actual market structure shift. So here it's actually shift the market structure, but right at the minute, I can only go for a small take profit, risking a big stop loss. So I'm not really interested in this. So let's see if I can actually get any better trades. Okay, it looks like it's going to approach above. And right at the moment, what we can see is a few more levels, okay? Because obviously I didn't take this level in consideration because it is small, but at the end of the day, it didn't give it much of a reaction, so actually I won't add it in. But what we do have is this small level here, and now we have another small level created in here. So now it's starting to get more choppy, and here's where the problems can actually come in. So what I would do is basically wait for the price to actually come out this range to actually have some clean traffic, so like some clean candles moving on the upside or on the downside, because obviously the cleaner the movement is, the less resistance it will offer in terms of looking for a trade. So in this case, it's breaking through all the levels. This one has been evaporated completely, and this one is starting to break through. And here we could have taken a sell position right at the moment, but again, we would get, I mean, on this one we would get risk reward of 1-to-1, but seeing it so choppy and so many levels, I wouldn't risk it to just come to this level. So I would just wait again. Okay, it's broken through again, and let's see if we actually get a retest on this zone here. This would be great. Okay, we're getting another push up here, and now what I would do is update the levels, because at the end of the day, these ones won't be so relevant anymore. This one is, because obviously it's just on this side there, and this one will be actually covered up to here, okay, because obviously we've got this resistance here. And as well, if we look at it properly, we can see that the price has pushed up, retested, and broken this high. So we could consider actually entering a buy position here, and I'm actually going to do it straightly on the market because where we are, it's fine. And the stop loss is going to be more or less down here, okay? I would say below this candle to make it even better, because it could actually weak these candles out. And right at the moment, as you can see, we don't have an actual range to put our take profit. So what I would do here is basically leave it to a risk reward of 1-to-1, okay? So let's set this to 1% risk and place the order. Let's see how this one performs. And there we go, it's hit take profit, perfect. And now what we have is another creation of a level just around here. So now we have a few levels that could make the price bounce back up, because obviously we've got this one here, this one is reacted and pushed up. This one has recently been created, and let's see if we get any level on the downside. Okay, there we've got the level, and what we have got now is a nice clean traffic on the downside, so we could actually aim for this level down here. So let's basically see how it performs. Okay, it's coming back up, it's taken this high, it hasn't closed above the level. This is interesting. So if the price comes down here, we could actually enter a trade, okay, considering this would be the max high. So let's see how it works. Okay, what it has done now is created another small level here. It's like push, retracement, push, retracement, push, retracement, and it's actually broken below. So honestly, I would take a sell position here because we have got clean traffic, but no, I'm not. And this is why, because at the end of the day, this level could bounce off. So if it comes below this level, then I would consider actually taking a trade on the downside. Okay, and what I am going to do is update this up here, and let's see what happens. It's broken through, it hasn't closed. So what I would do now is actually enter a sell stop. Okay, and I'm going to enter this sell stop just down here below this wick, put in my take profit on this level here, and my stop loss in this case is going to be just a bit higher, just a bit bigger than my take profit. In this case, a 0.5 to 1 risk reward. I mean, that's fine. At the end of the day, a lower risk reward will mostly just give us a higher win rate. So for a finishing trade of the day, it looks quite okay. If it doesn't come down, that's fine as well. Okay, it's retesting back to this level here, so that looks all right. And boom, there we go. Nice drop to the downside. Our sell stop acted really well here. And now, again, what we need to do is just basically change our levels in terms of what levels are relevant at this moment. And what we can find here is this level up here that is already marked out, this level here that looks interesting, and this one will split it down to here, and this one we can actually leave it more or less to this side here. As you can see, the levels don't need to be precisely exact. They're just there to give us reference of where we have space to trade and where we don't. So right at the moment, this level has been blown and this one is still active. So we could see, okay, it's breaking through and it's coming back up. So what we could see now is another market structure shift, and the price could come easily up here because this was a really strong movement, and obviously we could have some liquidity there. So let's see if we can actually get some trade here. Right now it's coming back down to retest this level, so it could be interesting to enter some buy position, but obviously if we use a market structure shift for the entry, it doesn't give us much space. So that's something that I would take in consideration, because we could enter here, but at the end of the day we don't have much range here, so it's not very intelligent to risk all this here to actually just get this small movement here, especially at the end, because we've already made 2 profits in the day. And obviously if we've already made 2 profits in the day, that means that the odds of having a longer streak obviously are going to be lower, and at the end of the day risking so much to get not so much, in this case it wouldn't be even 0.5 to 1, wouldn't be very intelligent. In this case it broke through and it did come to this level, so it would have actually taken the take profit. At the end of the day, the positive is that when we do have a lower risk reward, our win rate is always going to be higher. And now honestly, by the time it is, the London is coming to the end, so it will only be New York, and we could take a trade breaking these 2 levels here, but at the end of the day I could trade this market structure shift here, but I've got a level here and a level here, so at the end of the day it doesn't look really nice. Let's see how it would have performed. It did break the level below, so I could enter a sell position here, and it did come straight down to the level. But like I said, we did have a reaction here. This reaction could have taken the price up and hitting the stop loss. And now honestly I'll call it a day. I've taken 2 trades, I've been profit trades, so honestly I don't need any more, because the more trades I take, the more exposed I'm going to be to the market, and the more probabilities I'm going to have to end the day in a losing day. So at the end of the day, these are my principles to trade, especially on support and resistance. And if we come to analytics, we can see that firstly all the trades were perfect. I mean, we had a complete 100% win rate. Obviously we've only taken, I think it was 4 trades, but obviously this video isn't much focused on a result, on look how this strategy performed. It was more to share my way of seeing the chart, so you can more or less cherry pick whatever you like of how I see the markets, and obviously it can help you out on your trading journey. The good thing is that in Forex Online we can optimize these type of strategies, because obviously this strategy is a complete discretional trading style. So at the end of the day, we can't measure it, we can't create a trading robot, and we can't optimize a strategy. But in Forex Online we can do this, because we've got the analytics insight and we've got the exit optimizer, and the exit optimizer is going to tell us the best stop loss, take profit, and the max holding duration. So basically I can do, let's say, 200, 300 back tests, and if I wanted to optimize this without having Forex Online, I can't do it. I would have to do maybe 10 or 20, 30, 50 back tests with different variations, and that way try to optimize a strategy. But now with Forex Online, it does it all in the background, so you don't have to do it, and it just shows you the best stop loss. So what I can do, especially in the discretional trading, is basically I can see that if I move the actual stop loss round, the net profit changes round. So if I move this to 1000 pips and to 900 pips, 700 pips, 600 pips to 500 pips, the net profit doesn't change. That means that I could play with a stop loss from 500 pips to 1000 pips range. So if I see a support and resistance and it's 600 pips away, I can include it. But if the stop loss would be maybe 300 pips away, then I would consider maybe moving the stop loss to 500 pips to actually be in this sweet spot. As well with the take profit, I can leave the take profit from 800 pips to 1600 pips, and as you can see, it's more or less as a sweet spot in this entire range. So I can basically select based on what I see on the chart, based on what I see on the levels, which level I could actually take. So I know that if my take profit is going to be between 800 and 1600, it's in a sweet spot and I'm safe there. And as well, the max holding duration is really interesting because we can see how in this case, if I take it down to 34 minutes, okay, it's not going to be as beneficial as if I leave it at least for 1 hour or 2 hours. So this would be actually the max holding duration. It doesn't mean that every trade needs to hold so long, but I could, let's say if the best result is 1 hour and 43 minutes, so let's say I would close a trade if it hasn't hit and take profit or stop loss past 1 hour and a half. So this would more or less be how I approach my discretional trading style, how I like to trade. I like to keep it completely simple and just leave it logical in terms of if I've got a nice range, I can trade it. If I've got a choppy range, then obviously I'm going to be more careful because there's more places where price can actually bounce off, and this is just based on pure logic. And like I said before, this isn't a strategy that I want you to pick up and trade instantly. I just wanted to share my vision on how I see the markets and how I like to trade them, because maybe some of you can get some help out of it. So said this, don't forget that back down in the description you got the nice discount coupon so you can get Forex online for a cheaper price. And said this, I hope you've enjoyed the video. My name is Jack and I'll see you next time.